Hey guys, welcome back to another episode of the Trading Edge, the weekend edition. If you guys are brand new, my name is Akil Stokes. I'm a Forex trader, a trading coach, and one of the co-founders of Tier1Trading.com. And this is a weekend video that I put out for you guys showing you what's on my radar for the week ahead. If you guys are brand new on YouTube, make sure you subscribe, make sure you hit that notification bell as well. That way you don't miss my latest updates. Now, before we hop into today's technical analysis, we're going to go around and look at a few pairs in the market. But I want to give you guys some good news. If you didn't get a chance to see it, last week we did a free 4-day online workshop called Ascension. It was awesome. It was amazing. The recordings in full were scheduled to be taken down on Friday. However, we've decided to leave them up throughout the weekend just because a lot of people have been asking, hey, I'm working more hours now due to the pandemic and whatnot, and the weekend is the only time that I have to really take it in. So if you haven't watched it already, this is going to be your last chance. There's about 12 hours of footage. Invest some time this weekend and do so. If you haven't watched it, maybe you're late to this video and they've already been taken down. Don't worry. We do events like this a couple times a year. So just make sure you stay in the loop, and that way you won't miss the next workshop that we do. All right. Let's hop into the charts today. Let's take a look at the pound dollar first. And for you guys on the platform, a lot of this is going to be review. As you know, the markets haven't moved all too much, especially on the higher time frames. So, if you saw the video I put out on Thursday, if you've been in the live rooms, you kind of know the gist of my analysis. Too much hasn't changed. But for you guys that are on YouTube, this is going to be new. And of course, we have a lot of newer traders on the platform, so it's always good to get this repetition and review. But we've been looking at a short-term play here on the pound dollar. And real quick, on Monday's Q&A, we're going to talk a little bit about long-term trend versus short-term trend. We've had a few traders that are having some questions about it, so I think it's a really good Q&A question. But we're looking at a short-term move here on pound dollar. And I guess to walk you through what we've recently done is this, right? We've rallied down, right, after a little bit of consolidation over here on the left. You can see some choppy movement, choppy movement, choppy movement. And then we eventually broke strongly to the downside around March, right? Since then, we've been working our way and slowly correcting that move, right? We've gone up. We've seen a little bit of relief here. And then we most recently put in a higher high, higher close. Now, we have a 4-step prediction process here. It goes for micro trend and macro trend. It's IPDE, identify, predict, decide, execute. And when I identify a higher high, higher close, a violation of structure, it allows me to predict that the market is going to continue in that direction. Now, it's important to understand that this is not a trend continuation trade, so that prediction is going to be very conservative. But nonetheless, I do think we're going to see continued movement to the upside. And if we see movement to the upside, then we're most likely to come somewhere in this level. So what you're currently seeing right now is the market pulling back, right? We broke above and closed above structure. We're now pulling back into that structure. And again, what I would project is a move higher. The question is where, right? We have a big zone because this is a counter trend move, bigger picture. I do want to be conservative. I'm not going to shoot all the way up to $1.32 or anything like that. Doesn't mean the market can't go there. Again, I'm just a very conservative trader, especially when it comes to moves that go against the grain. So I'm going to shoot for really the lower part of our zone here. And something I can use to measure that out or give myself some confluence of that zone is our Fibonacci. So if I take my Fibonacci extension tool from swing low to swing high, you're going to see, boom, we've got a 127 right in that zone at 127.89, right under that 128 even handle. And even if I take kind of a miniature move of our last swing, right, this last move that violated structure, swing low to swing high and back down, boom, you're going to see I have a 127 Fibonacci extension lining up at that same level. If we want to add one more bit of confluence, I could take a Fibonacci retracement from our swing high right here, this last aggressive move to the downside, to swing low, and I'm going to have a 786 in that zone. So I have 3 Fibonacci levels all at that same zone that lines up with structure, lines up with a psychological number. Decent place to make a projection as far as where price action will continue if we can get that move to the upside. Next up is going to be the dollar Canada, aka the loonie, and this pair is very similar to a lot of pairs. We're not going to go through every single pair that looks like this because some of them just don't have the opportunity. But we had a lot of closes on Friday, which completed and gave us One of my favorite setups to trade in the market, which is going to be that 3-bar reversal pattern, that high momentum candle in one direction, that rejection / indecision candle here, and then that lower low, lower close. Now, again, before you go ahead and start trading this, the what is never as important as the where, meaning that the candlestick formation or the candlestick combination, or even a simple pattern formation like a double top or a double bottom, isn't as important as where it happens at. So I warn you, because I don't want you newer traders going out there and looking for 3-bar reversals and trading every one and going broke, because I can guarantee that will happen. But this is a sign that we're likely to see some continued movement to the downside. That and the fact that on this retracement, right, we've been able to kind of violate previous structure lows once again. So we are in this downward move to the downside, and now we put in a pretty nice continuation signal as well. So my first expectation is that we're going to continue down to see about 138.78. Now, and we could go a little bit further. The projection on the daily isn't too great, right? Initially, you would look at this level down here, kind of draw two levels for you. This little structure zone right here where this yellow line is, 134, maybe even a little bit higher, about 135.60s. I wouldn't be that ambitious, because if we scroll back just a little bit further, right, you're going to see, not even there, give me a second, let me load up some more data. Let's go 2,000 days. Boom. You're going to see a little bit of inside structure looking left as well here, about 137.86 is about 138, let's call it. So just want to be cautious. There isn't kind of, there's room to move to the downside. It wouldn't surprise me if we eventually came down here, but there is going to be some structure in the way of that. So the first conservative point that I would look for, again, is just a retest of previous structure lows, because this is our most recent level of structure, which is at about 138.81. Let's just call it 139. Now, from a daily perspective, this doesn't really do much. You can't trade it right here and expect profit down here. Your risk reward is going to be horrible. But what this tells you is that if you were to drop down to a lower time frame, let's say an hourly chart, for example, you can look for opportunity to trade it down into that level, right? You can see our VS1 zone sitting right near that lower level of structure, down above that 139 level. You can see the current break and close right here on the hourly time frame. This is something where you can look for that pullback opportunity in the structure, look for your shorting opportunity, and then all of a sudden you have plenty of room to trade it down into the zone, whether you're taking even if you're taking a large stop like this, right? You can still have that 1-to-1 risk reward ratio. If you're waiting for maybe a more conservative reason for entry and you're able to get a shorter stop loss, maybe hiding it right above this little inverted head and shoulder line, then of course your stop loss is even better. So again, using that daily time frame to kind of make your prediction, well, I guess to identify what's happening in the market, then making those predictions on what price action is likely to do and where price action is likely to go, then dropping down to that lower time frame to actually look for your reason for entry, and of course ultimately get in the trade if your entry rules are met. So following up on the dollar Canada and going over to the Euro Aussie, we mentioned a little bit there's kind of an inverted head and shoulders. Inverted head and shoulders is basically a backwards one, right? So a typical head and shoulders is a reversal pattern. It would come at the bottom of a trend. So a head and shoulders bottom, for example, would come at the bottom of a bearish move. You see a little move like that. The head sticks out down there. You get your right shoulder right here, and then you would expect a reversal in the opposite direction. An inverted head and shoulder is kind of like that. Imagine that head kind of pushed backwards. So you have a move like that. You get that head going this way, and then the shoulder line here. But instead of looking for a reversal, you would then look for a continuation. And that's what we're seeing here on the Euro Aussie 240 chart. Now, first and foremost, again, we always want to pay attention to where we're at. And price action is currently trading at a level of previous structure support. But the lows of that structure support are down near about 168, so there is room to go lower. And what we're doing here, if we zoom in, is we're putting in that inverted head and shoulders. You can see, obviously, the market came from a bearish move, right? And then we came down here. We kind of retraced up here, came back down, and now we're consolidating. Sorry about that. I should draw it in a little bit better. I get lazy with drawing these sometimes because I know what matters, so I don't need to put my eyes to it. But for you guys watching, you're like, wait a minute, where's that shoulder? So we have consolidation to the left. We have that inverted head, that head going upwards, and then we have consolidation to the right. If we were able to break this level, right, whether you want to draw this in straight, whether you want to draw it in slanted, that's going to be personal preference. If we were able to break that level, again, that's when I would expect that continuation move to the downside. 168 was a level that we had on the radar just from a pure structure perspective. I bet if we did a little more technical analysis, we would be able to kind of give some confirmation at that level. Look at that. 1-to-1 equal measured move, aka AB equals CD pattern. Probably a 1618 Fibonacci hanging out a little bit below that level as well. Boom. So again, you have not only your level of structure and your even handle number down at 168, you've got a 1618 Fibonacci extension. You've got a 1-to-1 measure move down at that level as well. Pretty decent projection point for if price action is able to go lower. That's where you can expect it to go lower too. And again, this is the Euro Aussie, which is a bigger, more aggressive pair. I shouldn't say aggressive pair, but it's got a bigger ATR. So although this move kind of looks minimal, there's like your Akil, there's not too much black space between this structure zone and this structure zone. You're actually looking at a move from about 170 to about 168. So this has 200 pips of potential. And of course, you can look at this on a higher time frame, intraday time frame, like a 4-hour, 60-minute, or day traders. You guys already know how we go down to the day trading time frames and look for opportunities that way as well. So pretty good opportunity here on Euro Aussie. All right, so before we get into our last pair, I just want to remind you guys, please do me a favor, support this video and what we're doing here by hitting that like button, subscribing if you're new, and of course, hitting that notification button. Also, if you like what you see, if you have any questions about the video, make sure you leave me a question or a comment in the comment box below. And if you want to share this on your favorite social media outlet, please do so as well. It helps the video out drastically, allows us to reach more traders and have a positive impact on more people's lives. I appreciate it in advance. Now, to get into our last pair is going to be the Aussie New Zealand. If you guys remember from Thursday's video, this was the #1 trade opportunity that was on my radar. I actually did a rare social media post, sharing a chart on Twitter, Facebook, and Instagram as well, looking at this opportunity. And what we were looking at was a potential breakout. I kind of, let me just go over to Trading View so we can kind of rewind this for you guys that did not see it, Aussie New Zealand. And we were looking at basically a high and tight flag, a level of consolidation right after a previous break of structure, right? So we were looking at this right about here, right? And we were saying, hey guys, I like this. Not only is it a high and tight move, but it happens after a violation of structure. I predict that price is going to go higher. We're going to break out to the upside. And we talked about the 3 different ways to trade this. Now, the price projection, the ultimate price projection, we always talk about conservative targets and aggressive targets because everyone's different. I try to give you guys something to help no matter if you're an aggressive trader or a conservative trader. But the most aggressive targets that we looked at were going to be up here around 106.65. And if we look left, zoom out to a daily, if we look left and I kind of make this not ugly, that lines up with a nice level of inside structure, right? You can see boom, 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 hitting right there. Now, recently we've done this. We did get our breakout. So we kind of go forward a little bit, boop, 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 right? We came down, broke out to the upside, right? So the positioning yourself before the breakout opportunity is gone. The trading it during the breakout opportunity is gone. So the only opportunity that's going to remain is waiting for the pullback. And that's exactly what we have here. Price action rallied up, and now we came back down to pull back into the zone. Now, I would say this, be warned. I haven't done any testing on this, but I've read this in a few books back in my early trading days. But what I've always heard inside these books is that if you get a breakout and it returns, it gives you a pullback, the pullback should not come past the 50% level of the breakout range, right? So if we look at, where's my Fibonacci retracement tool? If we look at the range of this, kind of this consolidation, it goes from here to here. the middle of that range is going to be right here at the 50% level, right? We should not come past that 50% level. Now, take that with a grain of salt, right? Most of the books that were written, especially early on, were written more so for the stock market and not the currency market. The stock market is a much trendier market. So a lot of the rules that apply, right, even like trend is your friend, a lot of the rules that apply to the stock market aren't necessarily the same as the Forex market. But what I've been telling our traders is, hey, if you're going to be a breakout trader, maybe it's something that you look into to see if it has any relevance or not. So not to scare you guys away or anything like that, but just something to bring to your attention. We're always talking about what's the next step on your testing journey and refining your strategy. That could be something that you add. But we've returned to that to our previous level consolidation. So something you may want to look for is an entry opportunity, right? Look for your reason to get involved. You're basically doing the same type of trade, right? You're probably not going to get involved this low unless we continue to retrace. The lower we retrace, the less chance I think we have of continuing up. But let's say you're able to get an entry reason up here, right? You can still get away with putting stops below that range. That's going to be the safest place to get your stops below. However, you may want to adjust your targets. Instead of just shooting for this super aggressive target, again, unless you're a true trend following trader, then that's okay. You may want to shoot for targets that are retest of previous structure highs, or at least have some type of trade management protocol that happens when you get to that level. But still an opportunity here on Aussie New Zealand. And we'll see what happens with this one. Hope you guys enjoyed this video. Remember, recordings are only up this weekend. It's about 12 hours of footage, so I would suggest you getting started right away before you run out of time. I will see you guys in the Monday Q&A. Again, we're going to talk a little bit about micro trends and macro trends, and of course, whatever else you guys send to me over the weekend. And until next time, plan your trade, trade your plan. You guys be safe out there, and make sure you remember to subscribe to the channel if you're new. Hit that notification button so you don't miss my next video, my next podcast, my next announcement about a workshop. And if you would be so kindly, just leave me a comment below, asking a question, give me a comment, something you like, maybe even sharing your analysis or just saying, hey, Akil, you're awesome. All right, take care, guys. Be safe.